It looked like early in the session we were actually going to have one of those big buy the dip moments coming off of that 1.5% decline in the S&P last week, but that was not the case here. The news flow was just a bit too broad. Concerns about the unresolved situation in the Middle East, concerns about a relatively hot retail sales report, and of course overall concerns about earnings as well. A 1.2% decline on the S&P 500, a two-day decline now that logs the worst two-day drop that we've seen for the S&P going back to March of last year. The yield story was where a lot of the volatility was. In fact, some of the biggest volatility we've seen in that space in about a year here, and a tons of volatility in the metals space. Aluminum prices only ended the day up by about 3% here, but the intraday swings that we saw, we haven't seen that in more than a year and a half. That was on the back of concerns here about the new sanctions. Now, there were some bright spots out there, Scarlett, and you can actually find that at the bottom of the screen here. An S&P banking sector up 1.8% on the day. What gives?
Big reason for that is Goldman Sachs gaining as much as 6% on the session. Today, it did close up by 2.9%. Chris Katowski, an analyst over at Oppenheimer, called the latest results a near perfect print. Net profit rising 28% year over year. And for most of the profit and loss lines, meaningful beats on those businesses. So Goldman Sachs up almost 3%. Morgan Stanley and Bank of America are up next. Now, in terms of a big decliner, I'm paying attention to Salesforce.com, down 7.25%, the worst performer in the Dow and the S&P 500. The software company reportedly in talks to buy Informatica, which is exactly the kind of strategy that led to pressure from activist investors. Bloomberg intelligence analysts say that a deal could attract regulators' attention, and not in a good way necessarily, and it could speed up consolidation in the software as a service space overall. Now, our top story this hour is investors bracing for a flood of China economic data, from monthly retail sales to industrial production. But the big report to watch for will be first quarter GDP and what it means for how Beijing moves forward with efforts to boost domestic demand.